So as Ashley just said, I'm sort of discussing the topic that's often a point of contention sometimes with owners, and that's exactly where does the money go. I'll be in particular talking about the administration and sinking funds. So, all right, the main topics today are the budgets and how they establish both the administration and sinking funds, and why these are so important to the successful operation of your schemes. Secondly, how to understand the proposed budgets and the financials presented at the AGMs. And finally, what options are available to you as owners to ensure that your levies are always paid on time. Okay, so the administration fund. It is a statutory requirement for a body corporate to establish and operate an account of this nature. Perhaps the biggest misconception out there amongst our owners is that the body corporate levies are capital fees. This is certainly not the case. As I'll highlight a little bit later, the management fees are a minimal component of the overall scheme's budget. So what is an administration fund? The administration fund is intended to cover the expenditure pertaining to the regular maintenance of common areas and body corporate assets, such as garden maintenance, pool cleaning, and the insurances for the complex. The expenditure is often recurrent in nature and can also include professional fees such as audit fees, the common power and termite and/or pest control services. So who decides what will be due and payable by each lot owner? As most of you would be aware, this occurs at the annual general meeting, otherwise the AGM, whereby the body corporate vote to accept the proposed budgets for each of these funds. A draft budget is often sent to the committee for their review before a final agenda is sent to all owners. Providing those budgets are resolved at the AGM, those figures will form the levies for the financial year ahead. It should be noted that the body corporate manager does not have any influence in fixing of these levies. The levies are then paid to the body corporate bank account. It may be collected by the body corporate management firm through their invoicing system on behalf of the body corporate. So I think sometimes that's where owners sort of see Capital's letterhead on the invoice, on the contribution notice, and that's sort of where the confusion sometimes can stem from. So they are the ones that was resolved at the AGM. Administration funds are very similar to household budgets, as they are items that occur on an annualised basis. Like most family budgets, as we as body corporate managers endeavour to assist the body corporates that we represent ensure there is enough funds to cover the expected outgoings. A general rule of thumb is to have the remaining balance of approximately 10% in the administration fund at the end of that particular financial year. As you would be aware though, this isn't always possible as circumstances can certainly change throughout the year. I'll now discuss a few of the common questions that are raised by owners at the AGM when they are looking through the proposed annual budgets. Now I believe you've all got these on your tables, so some of these obviously are a little bit hard to see from the distance you're at, so if you'd like, you can also refer to the paperwork on your tables. With regards to the figures detailed on this page, so it's the proposed annual budget, I think it should be handout 1. It is advisable to look at the far right-hand column, labelled budget, and compare that with the column labelled actual, as these two figures will provide an overview of what expenditure has already occurred for that previous financial year and what figures have been budgeted for this financial year ahead. If you look down towards the bottom of that, you'll see the surplus and also deficit line item. This will highlight the financial position once the expenses are subtracted from the income for this year alone. It should also be noted that any items within the brackets indicate that's negative in nature, so that's obviously something you need to be looking at quite carefully. As I briefly mentioned before, Capital's overall fees are a minimal component to the overall expenditure for a scheme. In this example here, our firm's fees make up approximately 12% of the overall budget. So it's not a huge portion, and that's sort of sometimes, as an office, we get owners sort of raising concerns that the fees are too high. When you sort of look at the other expenditures and stuff involved, they often are quite small. So now moving on to the sinking fund. And obviously if anyone has any questions, certainly I'm happy to answer those at the end. So As with the administration fund, it is a statutory requirement for the body corporate to establish and operate a sinking fund. So what is a sinking fund? The sinking fund is a long-term fund designed to make allowances for major future capital expenditure on the common property and also body corporate assets. The sinking fund levies are set based on a projection of expenditure over the next 10 years through a sinking fund forecast. And this report is normally undertaken by an expert third party. The sinking fund balance will fluctuate as levies are raised and paid and as capital works are completed on the site. However, the overall goal of the sinking fund is to avoid the need for owners to contribute additionally via special levies. The sinking fund forecast will outline the minimum required for this, and it's for this reason that the committee should only really use the sinking fund forecast as a guide. Therefore, when organising a sinking fund forecast, as a firm, we suggest the committee members meet with the contractor on site, and that being a quantity surveyor, to outline what their intentions are for any future works. This can ensure that the report is more specific to your actual complex and will most definitely align sort of the setting of levies with what actually the outgoings are going to be. This helps the committee should there be an increase in the levies, as they can highlight that the report forecasts the expenditure and therefore the increase is simply to realign the income with the proposed outgoings. So sometimes sort of either we or the committee can cop a little bit of grief if those levies are significantly increasing, but often that's as a result to simply realign with what that projection is outlining. So just be conscious of that as a little backup tool. All right, as previously mentioned, the two columns that are most relevant to this proposed annual budget is actual on the far left, and then also the budgeted on the far right. As the sinking fund is for major capital expenditure items, there is far fewer line items when compared with the administration fund. It should be noted that the sinking fund is for expenses that do not occur on an annualised or frequent basis. It is the equivalent of a savings account for a household. Okay, now the sinking fund forecast example, which is coming up next. As you can see from this cash flow summary, the levies do generally rise each year. As highlighted in the fourth column there, average sinking fund levy, Some owners see this as a negative. However, it is simply attempting to avoid the need to raise special levies when it's often a bigger burden to do that as opposed to small incremental increases each year. Additionally, it can act as a positive for any lot owner wishing to sell their unit, as a potential buyer can realise that the complex is in a very strong financial position and will hopefully have no need to call a one-off special levy. For both the administration and sinking funds, if an item is not budgeted for, a special levy should be raised to cover that actual expense. Some examples in the sinking fund forecast can include replacing the roof, repairing and or replacing windows within boundary structures, and the painting of the complex. The reason these items appear in the forecast is that they are non-recurrent in nature, but will certainly consume large portions of the scheme's funds, and therefore these funds should actually be allocated over numerous years to ensure there is enough money when the scheduled works is scheduled to take place. Alrighty, now understanding the other financials that also come out with the AGM is obviously there's a balance sheet and also a statement of income and expenditure. Now the statement of income and expenditure will outline also the administration and sinking funds. So I'm going to give a quick overview of those, and obviously any questions, please jot them down and ask at the end. The balance sheet is a summary of the overall financial position of the scheme. It is simply highlighting that the owner's funds, that's actually the body corporate, equals current assets minus any liabilities that the scheme may have. Additionally, there should be should a scheme have a term deposit, this would actually appear under the current assets. The scheme that we've sort of prepared as an example didn't have one, but that's where you would go looking for it should your scheme have one. The next two slides highlight the statement of income and expenditure for both the administration and sinking funds. These two reports will outline the expenditure for the last 2 financial years. This can provide a very accurate and concise summary to owners to monitor if any expenses that may have increased or decreased over the recent years. So that's sort of where, certainly if you see a trend there happening, you can certainly ask us as managers and we can always give an explanation as to why that's occurring. So certainly attempt to anyway. So I think, and that's just obviously again what you're looking for the statement of income and expenditure for the sinking fund. So moving on now is what options and also how to pay the body corporate levies once they arrive in your either email box or post. As you can see from the example up here, this actually appears on the bottom of all your contribution notices, and there's a number of ways that these levies can be paid. So most of you would already be paying them, but I just thought I'd run through exactly what's available to you. You can set up a direct debit through StrataPay, and one thing here is that after an AGM, if your levies increase or decrease, you actually have to be mindful to go and adjust that direct debit. That's your responsibility as a lot owner to sort of endeavour to do that in a good time, so that way you're not either paying more or less. Secondly, that you can pay by a credit card, and that can be done over the internet or phone. In person at the Australia Post, they'll accept cheques. BPay is also an option, and then you can actually just post a cheque back to the debt payment systems, and that's through Macquarie Bank. So there's sort of multiple options, so we're sort of always hoping that one of those can service the owners and ensure the levies are paid for the body corporate. That really concludes what I was going to be talking about. If anyone has any questions, certainly feel free to ask, or you can talk to me at the end as well.